Welcome to the Value Investor TV podcast. This is the podcast that helps you grow your wealth and become financially independent. My name is Becco, and I have a great. It's a real pleasure to introduce to you guys Sonal Shah. I've met him
Drum
through.
roll. Hello.
Drum roll, please. Exactly. So just a little background about Sonal. We can go more in detail in a bit, but he's currently based out of South Africa. He's been a fund manager for a while. He's now writing novels and a premium contributor to Seeking Alpha. Before that, he really cut his teeth in London School of Economics. Worked at KPMG for a while, and then worked on as a fund manager on the U.S. desk, and later being promoted to the Emerging Market Fund, all in Europe, in London, and then in 1998 he moved to South Africa, and ever since then he fell in love with Cape Town, and has been there ever since. And I would really classify Sonal as the Renaissance man of the investing world. He's writing novels and publishing articles in Seeking Alpha, and also making money on the side.
and,
So
and
it's a pleasure to have you
so
here.
much of a Renaissance man. Thank you. So much of a Renaissance man that the novels and articles are barely generating an income to live on.
It's a pleasure to have you here, Sonal.
Thank you. It's been interesting. This is not something I've done before, and I guess dragging me into the 21st century is probably a good idea.
Yeah.
from, from the
So
14th Renaissance century. Yeah.
exactly. So I want to explore, in this first episode, I want to explore with you, one of the areas, I guess, just for everyone's background, how Sonal and I got connected. We got connected through our common interest in a company, which we will talk about in a later episode. But more broadly speaking, I think both of us have a deep interest in investing in the emerging market, and more specifically in Indian market. I see a huge potential in Indian market. And also, I just like how Sonal is approaching the market from a very kind of a value orientation, making sure that there's a sound valuation to it. And speaking of valuation, this past week with all these IPOs, with Airbnb and whatnot, and crazy tech IPOs, I think it's now even more imperative that we kind of think about these fundamentals in a bloated market. So that's how Sonal and I got connected. Um, so yeah,
Our eyes met across a virtual room. Yeah. Okay.
exactly. So before we kind of dive into the Indian market and why we think it's an exciting place to be, exciting place to invest in, why don't we kind of walk through your investment sort of checklist or mental schema, as we talked about before the podcast. We talked about different sort of mental schemas that you go through yourself personally.
Yeah.
Um,
Yeah.
so why don't you talk
Okay.
about that a little bit, Sonal?
Sure. Okay. I I would start by saying, regarding a checklist, it's probably inadvisable to have a rigid kind of mechanistic approach in looking at quantitative data like price to book or return on sales or revenue growth, um, because if you pigeonhole yourself in a kind of data driven um, checklist, you would not be able to adapt to the changing investment style that is um, prevailing in our market. For example, value has, I think, now underperformed for a decade. So a value checklist would obviously have failed miserably. So I think it for me a checklist is um, more a question of assessing first the economy, right? I have a master's in economics from London School of Economics, and I tend to be more interested, I guess, than your garden variety fund manager in the kind of economic background in which a company operates, and obviously that has is a huge determinant in the company's future prospects. Um, so for me, they talk about like a top down and bottom up approach to investing. So top down would be, seeing where the economy is kind of um, ebbing and flowing, and a bottom up would be kind of earnings driven, but in my opinion, a top down and a bottom up approach coincide at the revenue line of the company. So obviously, you start, looking at the revenue and the revenue prospects of the company. Um, uh, let's see, what kind of moat they have, what kind of franchise they hold, what kind of pricing power the company can manage to sustain. Um, so that's all kind of on the revenue line. Then you go into the cost side of the picture. You're seeing, we're going into a stage of economies of scale, which is a big thing in the IT industry, obviously, with the massive scale of companies like Facebook, and then just seeing the scope for an improvement in margins or the threat of a deterioration in margins. So then you go down the checklist, and you eventually come out with the net profit of the company, and from that you obviously do evaluation. Now, before you get into the innards of the earnings and the valuation, you need to assess management. I mean, I think even large companies, you know, management makes a huge difference. It isn't kind of an autonomous um, vehicle. So the direction and character and trajectory of the company will be influenced by management. I think you can start by assuming that management lie, and then I think I start with that kind of presumption. That they'll always talk a good story. Um, so a large part of my job has been in trying to corroborate or establish the management narrative. If they say, yeah, our new mobile app is doing very well, then let's check the numbers, let's see the subscriber growth, let's look at the suppliers that might be providing the app, or maybe the cell phone or whatever. Seeing if there is supporting evidence for the claim management make. Um, it's helped me a lot in my career to always be very skeptical and jaundiced. Um, and um, Although someone like Warren Buffett would say he never wants to meet management because he can't trust them, I take kind of a contrary view in saying I want to see how credible management is, to what extent they are deluded, or to what extent there is some substance to the story they're telling you, and then try and pick holes in that story. So, even large companies, small companies listed in the US, you have your conference calls. You can email questions. You obviously listen to the questions of the analysts. I try and develop a good relationship with the company's IR. Many of the companies that most of the companies that I invest in, I have a personal relationship with the head of IR or even the CEO, and I try very hard to for that relationship to be mutually beneficial. So, in as far as I can provide the head of IR information, I'll go out of my way to try and do that. And I just find that leads to a more reciprocal or responsive um, attitude by the IR team.
So there,
Um,
so there's a lot there already. I wanted to kind of
okay.
harp on a couple of things that you mentioned there.
Sure. Okay. As we're in emerging markets, I'm allowed to smoke. Sorry, we're not first world taboo of everything like that. So occasionally you'll see this thing, which is just a tobacco cigarette, going to and fro from my lips. Okay, don't let it worry you.
Yeah.
Okay.
So a couple of things that I want to talk about there, I think is super important to touch on. You talked about kind of going down the income statement, starting at revenue, and revenue you approach it from both top down, and then the bottoms up
Yeah,
approach. Thinking about the cost,
exactly.
that's where the
Yeah,
economies of scales comes in, profit, and then
yeah,
you moved on to management. I think the part that's really interesting about our conversation, in particular to the company that we're about to talk about in the next episode, is that the management is actually quite important. And I think this is, like you said, this is contrary to a lot of value investors or investors with the value orientation, is that they just buy good companies and sit with it. But
yeah,
having that due diligence to go extra mile to check whether they are living up to that standard, living up to their own words, I think is super important.
yeah. Yeah,
And I
I
just want.
think it's essential. It's absolutely essential. People think that they can just rely on the historic data sets and graphs, which the good graphing tools which give you the earnings and the dividend and the revenue growth. But you're apt to find that if a company is stagnant, it is perfectly valued, right? That over time the market has valued it correctly. So you're looking for a dynamic or company either improving or deteriorating, which provides an investment opportunity.
But I think the point that you mentioned about having a good relationship with the IR, right? The last point you mentioned as it
Yeah,
relates to
yeah,
management.
yeah.
I just want to comment on a couple of things there. So, as some people have said to me, that 10K is just a marketing document, and I think that goes
Right.
to it's just
You
that's
mean the annual
another way of
report?
annual report. Yeah, it's just
10K.
another way of
Yeah,
saying
yeah,
that
yeah,
you can't really
yeah,
take everything at its face value. I think that's is sort of supporting what you were talking
yeah,
about. But the second point you
yeah.
mentioned about having a good relationship with the IR and having a mutually beneficial relationship, how do you do that as a retail investor? Right? I mean, a lot of our listeners here
Yeah,
are retail investors
yeah,
that have full-time job and etc. Do
yeah.
you think that's a
Um,
how do you do that? I guess.
you give your money to me, so let me do it for you. No, I'm kidding. No, even retail investors have full access to conference calls, right? And that's a primary or my main source of information. Every quarter, you have a conference call where management give their spin, and then analysts from the sell side ask questions. You could email your question to IR beforehand. You won't be allowed to talk on the conference call, but you certainly be able to get your question in, especially if you already own even one share, which they will respond to. But and on the point on the 10K that you mentioned, I mean, I agree to a large extent that things like the risk factors is just boilerplate, laundry list of every, including a tsunami and Martians landing and um, but within the 10K, as a chartered accountant, I get a lot of information from the detailed segmental analysis, trying to figure out maybe why did today's went up or why working capital is going down. um, I the, I think I you need to spend a lot of time on the numbers and the 10K in so far as it is mandated information required, right? It's very unlikely um, to have errors unless it's an Enron, unless it's a fraud. So for me, 10K, 10Qs are very important.
Yeah, absolutely. Yeah, submitting questions beforehand to the conference calls. I think that would be one way of engaging the
Yeah,
IR department of the companies that
yeah.
you're interested in.
and
Uh,
it's interesting, I mean, any company that you're interested in, you know it's almost like it's a story of a company, and it's a book, right? And you've got the balance sheet, which is the kind of snapshot of its financial position at a point in time, and then you've got the quarter or the year's earnings. And I find it maybe I'm just a nerd, but I find it fascinating to see how that company has kind of operated in a dynamic environment. And the questions that analysts ask, the challenges and threats that management have faced, it's interesting. So I think I find it fun, and I think anybody who's investing, um, once they get into a story and the detail of the company, they'll find it interesting too.
Yeah, I think that story aspect is really, I think it's really critical. It kind of goes to your interest in writing novels as well. It sort of meshes well together.
Yeah, but there I can predict or dictate the outcome, which
Yeah,
is convenient. Yeah.
yeah, exactly. So anything else you want to mention about kind of your mental schema? So you talked about bottoms up,
Yeah.
top down
Yeah.
management, having a relationship with
Yeah.
IR. Anything else you want to talk about there before we shift
Yeah.
gears?
I mean, sure. I'll just say I spend a lot of time on segmental analysis, right? So, like revenue per segment, if it's got three or four divisions, profit margins in each segment. Um, I find profit margins critical to a business. You know, the revenue to a large extent is an exogenous factor. The company is operating within an economy, but the cost structure and how the company is um, achieving economies of scale, improving margins, that I find very interesting, and so I spend a lot of time even tabulating, data, picking numbers from 10Qs, to try and um, get graphs of segmental profit margins, by division, and seeing how the trajectories look.
Hmm. Yeah, makes sense. Doing a thorough deep dive into each segment and doing segmental analysis and folding that up into the whole company story.
Yeah.
Yeah, that makes a lot of sense. And so let's shift gears a little bit here, and then start talking about the Indian market, the India as
Okay.
an investment opportunity.
Okay.
Back
Sorry,
in
because before we go there, in terms of like methodology, should we is this an opportune time to talk about investment style? Value and growth or whatever, or that's not something that you wanted to go into.
Yeah, we can go into that. Yeah, absolutely. I think it's yeah. If you want to talk about that, let's do that. I think it's important.
Yeah. Yeah.
Perhaps very very uh,
Opportune. Yeah.
opportune time to talk about that. Yeah, please.
Yeah. Yes. Yeah. No. So over the last decade, even legends like Warren Buffett have been hammered because of their kind of value orientation. Um, and by that, it's it's first good to know what you're talking about. When you're saying value, most people kind of think, oh, everybody wants value. Even if you buy a growth company, you want to buy it at a good price, right? So you want to add value. So the term value is quite a confusing one. Um, so in my opinion, a value investor is trying to find cheap shares, as is a growth investor, right? He's trying to buy growth that is not imputed in the current share price. Um, so I'm not too sure about that distinction. What I will say is that value has been massively an underperforming asset for the last decade, um, because of the QE, um, um, central bank quantitative easing, printing of money. One of the main um, consequences of all that money printing and interest rates going close to zero is that the discount rate is approaching one, right? So normally you have a time value of money, and as the discount rate approaches one or 0% interest rates, the time value of money $1 billion in year one is the same as $1 million, $1 billion in year 10, right? So there is no penalty given to a growth company that might make 10 billion in 10 years. It's the same as if it made 10 billion next year. So as a result, growth companies have uh, benefited from the reduction in interest rates because the future value of their profits as a growth company are discounted less by a lower discount rate. I hope that makes sense.
Yeah, yeah, absolutely. Let me just regurgitate kind of what you talked
Yeah,
about for our audience. Hopefully, this will add to the understanding. So, I really like the word that you use, punish, punishment, discount as a punishment mechanism to kind of think about the future projected cash flow. And so, because that punishment is now 0% or approaching close to 0%, the future
exactly.
$1 million is worth exactly the same as the current $1 million. And so, because there
Exactly.
is no penalty, the growth is being valued at a higher rate because there is
Yeah,
no
it's being
discounting
rewarded.
mechanism.
That so Tesla, if it makes $5 billion in year five or year 10, when the discount rate is close to 0%, the value to in the share price is the same. And it's very counterintuitive, isn't it? That if Tesla achieves its target in year five or year 10 or year 20, it doesn't matter. That's why Tesla is going through the roof because there is no penalty for the time value of it achieving its goal.
Mhm. Yeah, I also really like the point that you talked about in terms of value investing, the definition of value. It's really a loaded term. It's a loaded
Yeah,
term, and I think people kind of only look at value in a very narrow light in
yeah,
terms
and
of looking at like
yeah,
very traditional, book value and things like that in
exactly,
terms in the
exactly.
Ben
The
Graham kind
the
of way.
exactly, yeah. But Ben Graham, when he wrote his book and totally benefited from the stock market, stocks were trading at a discount to book value, right? So and because of that, and his whole the book which he wrote was kind of the thrust of the message was find shares that are trading at a discount to book value. But you're not going to find that now, right? There's no virtually no share that trades at a discount to the depreciated uh, fixed assets on its balance sheet. So
Hmm.
book value, price to book value being the kind of hallmark of the value investor is a very misguided or incorrect term.
Yeah, absolutely. Yeah, so I think that was a good point to touch on, especially with nowadays with hyper growth share prices
Yeah,
going through the roof.
yeah.
Great.
which
Should we
which
now
is a
pivot
fact.
to?
Yeah, yeah, yeah. Which, as I said, is a factor of QE. Right, as $13 trillion has been printed by the world's central banks in the last since the 2009 crisis. Um, that has trebled global money supply in a decade. All that money is just chasing growth, and the other side of that quantitative easing is very low interest rates, thus benefiting growth investing. Okay,
Mhm.
let's go on.
Yep. Thanks for that summary. So moving on to the Indian market, I just want to quote some of the things that you said in that 2018 article on Seeking Alpha. And by the way, if you guys want to read more of Sonal's work, please visit Seeking Alpha. Type his name, you'll see a ton of articles, quality articles. So back to the topic here, I just want to quote a couple of things that you said. The digital beast in India is about to be awakened.
Wow.
Digi- digital emergence of 300 million people offer unrivaled opportunity. And then the last quote. Last call for E-train to Mumbai. Hop on board.
I like that.
So talk a little bit about the indie market and your take on it.
Yeah. Okay. Yeah. It's a fascinating story, and a very bifurcated economy. Most people think China, and they think, oh well, then India. Um, so there are some very important distinctions about in India is one of the most inequitable economies in the world. Okay, there's I think three people in the top 10 richest people in the world, top 10 fortune people are Indian, right? Um, but you also have a whole swathe of people who earn less than $1,000 a year. Okay, so GDP per capita in India, the average GDP is $1,500 per year. Um, and I think the States is about 35, 40,000. I'm not sure. But China is $7,500 a year. So it's obviously higher. But within that $1,500 a year, you basically have 80% of the population below the average, right? So 80% of the population earn less than $1,500 a year. And 20% of the 20%, we have a few extremely rich people, which obviously drags the average up, but the median is much lower. Okay. Sorry, this is all very mathematical. I'm hoping you can just nod if you don't understand. No, I'm kidding. So it's a very polarized society. So in the last few years, you've had lots of e-tailers going to India, like Timberland or Gap or whatever, and they've come out with their tails between their legs because the 1.3 billion people with the GDP rising at 8% per annum. Well, there were no feet walking into the stores because 80% of the population can't afford a Big Mac for lunch. Um, so it's a difficult or a paradoxical situation. Nonetheless, GDP growth is booming, okay, and there are enormous opportunities. It's like the last digital frontier left in the world, which is growing at 8%, um, which is just about digitizing. So two, two, three things. In the last 5 years, 30% of the people have smartphones. Okay, it's gone from about 10 to 30%, and we're talking a very basic functionality of a $50 smartphone, but it still enables e-commerce or e-services. Um, Up to 2016, India was very much a cash economy. Okay, 90% of the economy was a cash economy, which kind of didn't accommodate digitization or e-commerce, and it was also informal. It was not taxed. It was probably in the black market. So India in 2016 they called it the mother of all reforms. They demonetized the economy. They basically confiscated 90% of the bank notes to try and force the economy into formal banking channels. And that is the you know golden opportunity that is now opened to exploit those 1.4 billion people, albeit with very low incomes. Those incomes are rising at 8% plus in terms of GDP growth. Um, and it's like the gold rush, right? There aren't established players like in China where you have Tencent or WeChat or Alibaba. Um, it's an open playing field, and everybody wants to get into it. Okay, Facebook currently bought a large stake in a company called Geo, which is owned by the second richest, or I don't know, the top 10, one of the top 10 richest men in the world, Ambani, which is a dynasty family in India. And he started this telecom company, Geo, which in the space of 3 years has got something like subscribers because he gave data for $2 a month, unlimited data for $2 a month. Voice was free. So he basically has taken over from Vodacom, and I think Barticel. There were a few other players, but it's a country in huge flux. Google Pay has just gotten in as well. So when India, or Modi, the prime minister, demonetized India, he also set up a platform to allow everybody, even the rural population, to have access to digital payments. Okay, it's called the UPI system, which stands for United Payment Interface, which is basically a platform that allows digital e-commerce or services or payments, either peer-to-peer, from person to person, or from person to business. So even the tiniest little corner shop in the most rural village, where the 99% of their business might have been cash, now is obliged, because of the actual virtual absence of banknotes, is now obliged to get onto this payment system. And everybody in India has a payment facility. So every maybe in America you don't have a kind of unique ID number for every person, but in Britain you have your NIS number, your national insurance number. In India you have something called the Andar number. So 1.4 billion people or 1.3 billion people, they all have a unique number, and that number has now facilitated this um, platform for digital transactions. And that's only since 2016. But the rate of growth of that as the mechanism of e-commerce is just exponential. And that's the gold mine that, when Facebook bought into Geo, when Alibaba or Ant Financial bought into Paytm, everybody's trying to get at that into the last untapped large market left in the world, and that's India. And what I find fascinating is it's still very unclear on who will be the ultimate winners. One of the things that you also have to understand about India is it's a social democracy, right? So, for example, the government, through this UPI platform, Google Pay was becoming a very dominant payment gateway. So just last month, the government has mandated that no payment platform can have more than 35% market share. Um, so they the it could actually be a very good idea for the US as well. And in fact, the CEO of Google, Sundar Pichai, who happens to be Indian, actually told the US government that I think the Indian system ought to be adopted in America because it is the fairest, um, interoperable, non captive, like Apple's War Garden. It's an open platform system. So there's a lot going on in India, and everybody, you know, from Alibaba to Jack Ma to Zuckerberg to Google, um, and to the company that Beko and I met on, Ebix, which is actually a US company with an Indian CEO who's now going back to his motherland, or trying to, attack or capitalize on the digital profits from India. It's the last big digital market, and um, what else can I say about it? There are still no winners. Okay, like WhatsApp. Everybody in India uses WhatsApp. Okay, but and it's only been there for 2 or 3 years. I think it went from close to nothing to 700 million subscribers. But they're also trying to set up a payment mechanism, and obviously that would have been a real winner. Like in China, you have WeChat and WePay, which basically became the ubiquitous payment mechanism in China. Um, WhatsApp will not be able to do that in India because of the mandates imposed by government. I don't know if that gives you some idea of both the opportunity and the complexity of the economy.
Yeah, absolutely. The gold rush, I think. To your point about the gold rush, I think it's a very apt word to use with all these companies trying to tackle the market, not just in the
Yeah,
digital front, right? I mean, you talked about all these companies, retail companies, going after the Indian consumer market and walking back to their wherever they came from with tails between their legs.
yeah,
But with like this new frontier of digital, digitization, especially when it comes to payment, I think there's
yeah,
it's the uncharted territory, and slowly, right? Slowly, companies like
yeah,
you and I we talked about in the next episode, Ebix and whatever else. People are sort of getting into this market, but to your point, the it's still early in the game, sort of murky.
yeah.
It the
Absolutely. Yeah,
government has a quite a bit of role to play here, obviously, with all these incentive structures, UPI system in 2016, taking these banknotes out of the circulation. Certainly a very, very interesting market, from our perspective. And in terms of growth perspective, it's really, like you said, unparalleled opportunity to digitize 300 million people into the digital payment ecosystem.
yeah, yeah. Yeah, and 300 million is kind of what people term the middle class. I mean, India has 1.4 billion people, uh, but but that middle class is moving to an income bracket which will, permit buying Gap clothes or cappuccinos or well, masala Indian chai actually, but it'll permit some disposable income which is attractive to the world's consumer brands.
Yeah. I mean, that's, basically like 300 million. That's, middle class, Indian middle class. That's basically a population of the US, the
Nation of
entire
America.
US.
Yeah, yeah, and they're a lot thinner. Yeah.
Yeah. So a couple of, a lot thinner. Okay. I didn't get that part. Now I got it. Yes. Yes. About to get little plump, little bit more plump, as they rise into the middle class. They need a little bit of more McDonald's and French fries and whatever else.
Yeah.
Okay. There are a couple of questions that I wanted to kind of fire off, and these could be pretty quick answers. So these are questions that I collected from our audience, that had a particular interest in investing in India, and so I just wanted to bring them up to you, and we could talk about them here.
Sorry,
So there are
who?
four
Orbis.
questions.
Sorry, who did you say? Questions from whom?
Our audience,
Orbis.
our
Oh,
audience.
your audio. Okay, I heard Orbis. Okay, go on. Yes, go on.
Yeah. So there are four questions here. Let's start off with the first one. Any major Indian success stories that we should be aware of?
Yeah. I mean, the IT companies, Wipro, Infosys, are kind of the equivalent of Arthur Anderson's and the Pricewaterhouse consultancy arms. They've done phenomenally well abroad. Um, Tata, which is a car company, recently bought Jaguar. So there are lots. There are increasingly powerful stories of Indians kind of venturing abroad. Uh, in India itself, which I guess the question is more um, directed to that. Um, the environment is so much in flux. Like this, I just talked about Geo, right? JIO, which is this mobile phone company operator, which is just paid for 5G networks in India, and has just totally obliterated the competition. Um, I think when you look at when you look at India, it's important to know who the target market is. So you forget about Model Threes, Tesla Model Threes. Okay, you might have Chinese EVs, worth $3,000 for as the price of the car. Bicycles, mopeds, um, your first furniture set. I don't know. You've got to be able to think in terms of the disposable income of the average Indian. Um, Education is a big thing, both kind of probably shared with the kind of Chinese cult mindset. Parents will do anything to educate their children. And have I forgotten the name now? There's this online educational company for BYDU, which has made interactive online teaching just so interesting and engaging that starting from India, they've basically taken over the world market in online education, which has obviously been accelerated by COVID. And Mark Zuckerberg, in his personal foundation, took a stake in this company. Um, Indians are pretty damn imaginative, academic, um, um, and very interested in money, especially a discount. So it's good. It's got an enormous potential if you can find a company that is harnessing the intellectual capital, the brain power of people, and leveraging that onto the global stage. That kind of me is kind of a mental schema that I think about, right? And for example, Ebix, the company that we're going to talk about now, it has monopolized insurance exchanges in America, right? So it's basically millions of policies that are transacted through agents or via the carrier and the customer. They the X-ray that the guy has for his health insurance plan, or um, the quote for the policy from various carriers via various agents to the customer will all go through that EBIX exchange. And EBIX has managed to get very fat margins because most of that back end heavy duty IT work is done in India.
Right. I mean, obviously, India as like this powerhouse, IT powerhouse, has been known for a while. Um, but yeah, some of those names that you mentioned, I think, would be good for our listeners to kind of dig into more. Let's move on
Yeah.
to the next question here. I think this is a good one. Is fraud
Okay.
or
Sorry, because was
corruption?
that was that too long an answer? You just want like three names? Would you prefer that?
No, no, that's good. I think we can go into, yeah, that level of discussion is
Yeah.
good.
Yeah.
So shifting gears, is fraud or corruption as big a deal as I've heard?
Yeah. Bigger. Um, um, I think even these large multinationals I talked about, Infosys, Wipro, even they, despite being globally successful companies, there were cases of fraud. I don't know which one. I think it was Wipro. Um, there seems to be a tendency to try and not pay tax, or to try and get a good deal. Okay, it just seems like in the Indian psyche to try and avoid parting with money, and people will sail close to the wind, and this is augmented by a lax regulatory framework, and even more lenient enforcement, right? In terms of the number of tax officials or audit firms or whatever, there's huge scope for people to try and cheat. And I would go as far as to say that it almost seems to be an innate Indian personality trait to try and avoid paying taxes, or to try and underpay your suppliers, right? So you've got to be very vigilant. But by the same token, um, the other side of that coin is, you've got some serious brain power being used to find new opportunities. You just have to make damn sure they're legal. Okay. Yeah.
Yeah, I
Yeah, I don't
think
know if that answers your question, but
no,
yeah.
I think no,
So
I
for
think it
me,
does.
yeah,
It, no,
yeah,
I think it paints some pictures, it paints some colors around this. But I think it kind of speaks to, I guess, going harping back to one of the first things that we talked about in the episode, which is really doing your
yeah,
diligence in terms of understanding the management and talking to the RER and
yeah,
doing the segmental
yeah,
analysis, being really diligent about that as you're
yeah.
approaching these companies, because it is such a,
No,
it
absolutely.
is pervasive. To your point.
Yeah, yeah. And the hallmark, or the certification of the auditor, is important. I mean, you probably heard about the big four firms. I would not invest in a company in India that did not have a big four auditor.
So actually, that's a good segue to the next question. It came from one of our listeners here. Are there reputable auditing firms in India or that are operating out
Yeah,
of India? So that maybe that
yeah.
answers your question. Answer these questions.
No, absolutely, absolutely. So is it Price Waterhouse, Arthur Anderson? No, Arthur Anderson's died because of Enron, didn't they? KPMG, the big four are all in India, and
Yeah,
and
Accenture. Yeah,
there is no reason to have a listed company that doesn't have the hallmark of a big four auditing firm. I would just not go there.
yeah, that sounds good. I think that's all the questions that there's more pointed questions, but we can save them for later. But I think that sort of nicely caps our first episode here. We talked about kind of your checklist, your mental model, mental schema that you use. Really kind of honing in on a couple things here. I think management is something that really stood out to me, as well as doing the segmental analysis. And then we talked about sort of overall market condition with Kiwi really distorting the market. And then we shifted gears and talked about Indian market and its huge potential. The last train, the last call for E train to Mumbai, hop on board, really left a mark on me there. And then some pointed questions about Indian success stories that we should be aware of, and then the fraud and corruption aspect of it as well. Great. Thank you so much for
Good,
tuning
thank you.
in, everybody, and thank you, Sonal. I look forward to our next episode, which is going to be super exciting. Our mutually a company that we both are interested in, and so looking forward to doing a deep dive there. And if you guys want to follow Sunil and his amazing work at Seeking Alpha, please do so. Look up his name, Sunil, Sunilshah. So
So the
check him
first
out.
name is Linus spelled backwards, if that helps you.
Yep. Yeah. Exactly.
Great,
Yeah.
thank you, and
Yeah.
I would just like to say thank you very much, Biko, for having me. It's new for me. I'm delighted to do this. I think investing is a fascinating game. It would be absolutely stupid to give your money to a fund manager like Vanguard or Fidelity. You, as an individual, have the capability and the insights to do it yourself, and it's bloody interesting. So do it. Don't give your money to some mutual fund manager.
Yeah. Excellent point to end on. All right. Thanks
Yeah, and
everybody for
so
tuning in.
maybe just a quick punt. Seeking Alpha is becoming one of the premier forces in investing, both in terms of their investment methodology, the people who write for it, the richness of the conversations on the site. If you like investing, get on to Seeking Alpha and start reading. Thank you.
Is there any other way that you want our audience to reach out to you? Like, do you have a Twitter account or anything like that that they can follow you on,
Yeah,
Sonal?
yeah. Just send dollar MoneyGram transfers to the link that I post below. No. You can contact me on Seeking Alpha, and there's a messaging app within it. It's very easy.
Okay, fantastic. All right, stay tuned for our next episode, guys. I'll see you there. Thanks, everybody.
Thank you, and thank you, Biko. See you soon.